In March 2024, Saudi Arabia quietly let a 50-year agreement with the United States expire. An agreement so important that it's been called the foundation of American economic dominance for half a century. The Petrodollar Agreement. For 50 years, Saudi Arabia, and by extension, most of the world, has sold oil exclusively in US dollars. Not euros, not yen, not gold, only dollars. This single arrangement has given the United States power that no empire in history has ever had. The ability to print the world's money and have other countries need it just to survive. But that system is starting to crack. Countries are making oil deals in yuan, rupees, even Bitcoin. And if the petrodollar system collapses, the consequences for America and the global economy could be catastrophic. This is the story of how the U.S. turned oil into a weapon, how one handshake in the desert created 50 years of dollar dominance, and what happens when the rest of the world stops playing by America's rules. To understand the petrodollar, you need to understand what happened in 1971. Before 1971, the U.S. dollar was backed by gold. Under the Bretton Woods system, other countries could exchange their dollars for gold at a fixed rate, $35 per ounce. This meant the U.S. couldn't just print unlimited money. Every dollar had to be backed by actual gold reserves. But by the late 1960s, America had a problem. The Vietnam War was expensive. Social programs were expanding. The government was spending more than it could afford. And other countries, especially France, started demanding gold for their dollars. The U.S. was running out of gold. So in August 1971, President Nixon did something radical. He ended the gold standard. The Nixon shock. Overnight, dollars were no longer backed by anything except the promise of the U.S. government. This created a crisis. If dollars weren't backed by gold, why would anyone want them? What gave them value? The answer came 3 years later, in 1974, and it involved the largest oil producer in the world, Saudi Arabia. Here's what happened. In 1973, OPEC, the cartel of oil-producing nations, had embargoed oil shipments to the U.S. because of American support for Israel in the Yom Kippur War. Oil prices quadrupled. Gas lines stretched for miles. The U.S. economy was in chaos. The Nixon administration realized something. America couldn't control oil supply, but maybe it could control the currency oil was sold in. So Secretary of State Henry Kissinger flew to Saudi Arabia with a proposal. The deal was simple, but brilliant. Saudi Arabia would sell oil only in U.S. dollars. In exchange, the United States would provide military protection, weapons, and political support to the Saudi monarchy. Additionally, the Saudis would take their dollar profits and invest them back into U.S. Treasury bonds, essentially lending the money back to America. In 1974, Saudi Arabia agreed. And because Saudi Arabia was the dominant OPEC member, other oil producers followed. Suddenly, if any country in the world wanted to buy oil, the most essential commodity on earth, they needed U.S. dollars. This was the birth of the petrodollar system, and it changed everything. So why does it matter that oil is sold in dollars? What's the big deal? The petrodollar system gave the United States 3 enormous advantages that no other country has. Advantage 1, infinite demand for dollars. Every country needs energy. Cars, planes, factories, power plants, everything runs on oil. So every country needs dollars to buy that oil. This means there's constant global demand for U.S. currency. Countries have to hold dollar reserves. They have to earn dollars through trade. The dollar becomes essential to their survival. Think about what this means. The U.S. can print dollars, and the rest of the world has to accept them because they need those dollars to buy oil. No other country has this privilege. If Japan prints too many yen, demand for yen collapses and the currency crashes. But if the U.S. prints dollars, other countries still need them for energy. This gives America an enormous buffer against the normal consequences of money printing. Advantage 2, the U.S. can borrow almost unlimited amounts at low interest rates. Remember the second part of the Saudi deal? They invest their oil profits in U.S. Treasury bonds. So here's the cycle. Saudi Arabia sells oil for dollars. They accumulate billions of dollars. They take those dollars and lend them back to the U.S. government by buying Treasury bonds. This is called petrodollar recycling. Oil profits flow back into the U.S. financial system, keeping interest rates low and funding government spending. The result? The U.S. can run massive deficits, $36 trillion in debt, and still borrow money cheaply because there's always demand for Treasury bonds from oil exporters and other countries holding dollar reserves. No other country can do this. If Italy or Brazil tried to run these kinds of deficits, interest rates would spike and they'd face a debt crisis. But the petrodollar system props up American borrowing. Advantage 3, financial weapons. Because the global financial system runs on dollars, the U.S. can use the dollar as a weapon. This is where sanctions come in. If a country does something the U.S. doesn't like, America can cut them off from the dollar system. This is devastating, because without dollars, you can't buy oil. You can't trade internationally. Your economy collapses. This is what happened to Iran, Russia, Venezuela, North Korea. They were locked out of dollar-based financial systems, and their economies suffered enormously. The petrodollar isn't just an economic arrangement, it's a tool of geopolitical control, and it's been the foundation of American power for 50 years. So if the petrodollar system is so powerful, why is it falling apart? Because the rest of the world is tired of playing by America's rules, and they're starting to find alternatives. Here's what's happening. Crack 1. Countries are trading oil in other currencies. In 2023, China and Saudi Arabia started discussing selling oil in yuan, Chinese currency, instead of dollars. Brazil and China made similar deals. India is buying Russian oil in rupees. These aren't one-off transactions, they're the beginning of a trend. Major oil producers and buyers are realizing they don't need to use dollars if they don't want to. Why would they do this? Several reasons. First, many countries are tired of U.S. sanctions. If you're Russia and the U.S. can freeze your dollar assets anytime, you want to reduce dollar dependence. If you're China and you're worried about potential conflict with the U.S., you want alternative payment systems. Second, countries want more financial independence. Why should Brazil need dollars to trade with China? They're tired of conversion costs and U.S. oversight of transactions. Third, the rise of China. China is now the world's largest oil importer. They want to pay in their own currency, not dollars, and they have enough economic power to demand it. Crack 2. Digital currencies and alternatives. The rise of cryptocurrencies and central bank digital currencies, CBDCs, creates alternatives to the dollar system. Russia and China are developing their own payment systems, Russia's SPFS and China's CIPS, designed to work without dollars and outside U.S. control. Some countries are even discussing using Bitcoin or other cryptocurrencies for oil trades to avoid traditional banking systems. Crack 3. The weaponization of the dollar backfired. For decades, the U.S. used sanctions as foreign policy. But each time they cut a country off from the dollar, it gave that country an incentive to build alternatives. Russia, after being sanctioned in 2014 and again in 2022, massively reduced dollar reserves and built non-dollar trade relationships. They now sell oil and gas to China and India in rubles and yuan. Iran, cut off from the dollar system entirely, developed workarounds, barter deals, cryptocurrency, selling oil at discounts for other currencies. The more the U.S. weaponizes the dollar, the more motivated other countries are to escape the system. And now they have the economic power to actually do it. Crack 4. The Saudi agreement expired. Remember that 1974 deal between the U.S. and Saudi Arabia? It was renewed every few years for 50 years. But in March 2024, Saudi Arabia chose not to renew it. This doesn't mean they immediately stopped selling oil in dollars, but it means they're no longer contractually obligated to. They now have the freedom to accept other currencies, yuan, euros, whatever they want. This is a massive symbolic shift. The cornerstone of the petrodollar system is now optional, not mandatory. So what happens if the petrodollar system actually ends? What are the consequences for America and the world? Consequence 1. Dollar demand crashes. If countries don't need dollars to buy oil, demand for dollars drops significantly. This would cause the dollar to depreciate, potentially rapidly. A weaker dollar sounds good for U.S. export,
But the downsides are severe. Import prices skyrocket, inflation spikes. Anything America buys from abroad, electronics, clothing, cars, becomes much more expensive. Consequence 2. Interest rates explode. Remember petrodollar recycling? Oil producers taking their dollar profits and buying U.S. Treasury bonds? That keeps interest rates low. If that flow reverses, if oil producers stop accumulating dollars and stop buying treasuries, demand for U.S. government bonds drops. To attract buyers, the U.S. would have to offer higher interest rates. Suddenly, financing the $36 trillion national debt becomes much more expensive. Instead of paying 3 to 4% interest, maybe it's 7 to 8%. Interest payments that are already approaching $1 trillion per year could double. This would force massive spending cuts or tax increases. Social Security, Medicare, everything would be on the table. The political consequences would be enormous. Consequence 3, America loses financial leverage. If the world doesn't need dollars, U.S. sanctions become toothless. You can't threaten to cut someone off from a system they're not using anymore. This fundamentally changes America's geopolitical power. For 50 years, the U.S. has been able to pressure countries economically without firing a shot. That leverage disappears. Consequence 4, global instability. Here's the thing. Even though the petrodollar benefits America disproportionately, it also provides global stability. Everyone uses the same currency for energy. Everyone holds dollars as reserves. There's a predictable system. If that system breaks down and different regions use different currencies, yuan in Asia, euros in Europe, maybe a basket of currencies elsewhere, global trade becomes more complicated and fragmented. Currency volatility increases. Transaction costs rise. Countries might weaponize their own currencies. We could see currency wars and competitive devaluations. The transition away from the petrodollar could be messy and chaotic, even for countries that want to escape it. So is the petrodollar system doomed? Is the collapse inevitable? Honestly, it's complicated. On one hand, the trends are clear. Countries are actively trying to reduce dollar dependence. Trade in other currencies is increasing. The Saudi agreement has expired. Alternative payment systems are being built. On the other hand, the dollar has enormous inertia. It's still the dominant reserve currency. About 58% of global reserves are in dollars. The U.S. economy is still the largest and most dynamic. U.S. financial markets are the deepest and most liquid. There's no clear alternative that everyone trusts. The euro has problems, the eurozone is fragmented and has its own crises, the yuan isn't freely convertible and China's capital controls make it unsuitable as a global reserve currency. No other currency is big enough or trusted enough. So what's likely to happen isn't a sudden collapse, but a slow erosion. The dollar remains dominant but gradually loses market share. More trade happens in other currencies. Countries hold diversified reserves instead of mostly dollars. This is already happening. The dollar's share of global reserves has dropped from 71% in 1999 to 58% today. That's a significant decline, but it's gradual, not catastrophic. The real question isn't if the petrodollar system will end, it's how fast and whether America can adapt. If the transition is slow and managed, maybe it's survivable. America would have to live within its means, no more unlimited cheap borrowing, interest rates would be higher, deficits would have to shrink, living standards might decline. But if the transition is rapid and chaotic, maybe triggered by a major geopolitical event or financial crisis, the consequences could be severe. Currency collapse, soaring inflation, debt crisis, political upheaval. The petrodollar system has been the foundation of American economic power for 50 years. It's allowed the U.S. to print money, borrow cheaply, and dominate global finance in ways no empire ever has. But that system is built on a handshake from 1974, and handshakes don't last forever. Saudi Arabia let the agreement expire. Countries are trading oil in yuan and rupees. Digital currencies are creating alternatives. The world is slowly, deliberately building a post-dollar system. What happens next will determine not just America's economic future, but the shape of global power for the next 50 years. If this changed how you think about dollar dominance and global power, hit subscribe. I'll see you in the next one.